Yesterday, Friday, was a flashback to basically 2008 as we went into the banking crisis. And I thought, are we doing the same thing over again? When a bank basically came up and said they had about $150 billion of uninsured assets. It was the Silicon Bank of California. And what they were saying was that they were insolvent. They could not meet their demands because of some investment mistakes that they had made earlier. They had taken these deposits, and then they'd taken the deposits and invested them in bonds, a laddering of bonds, and some of those bonds were bought back when interest rates were zero, so they were getting somewhere in the neighborhood of maybe 2% on their bonds, and then as the interest rates have gone up to 4, in some cases 5%, their depositors are taking their money out and they have them locked up in these bonds. And as the depositors are taking that amount, they have to sell the bonds at a loss. And they basically are saying they have $151 billion of uninsured assets. And what that means is a depositor, whether it's an individual or a company, is only insured for $250,000, and if you're a SPAC or a startup and you've deposited $3 billion in there, only 250 of it is insured, and you just wrote your payroll checks for Friday, and they're probably going to bounce on Monday. And these people aren't going to be able to make their car payments, their house payments, their credit card payments, because a lot of them are working and living hand to mouth. And is this the start of what happened back in 2008? Did we trust these banks to make good loans back in 2008? Did we trust our banks today to make good investment decisions? And then Jerome Powell came around and started raising interest rates, and now they have bonds that they're getting paid 2% on, and they've got to sell them when new bonds are selling for are paying 4%. So the value of those bonds are cut in half, and that's how they're losing somewhere in the neighborhood. They said they needed to raise $2.25 billion. Man, this is confusing. And what I recognize is that just didn't happen to one bank. Heck, another bank, what was it? First Republic, their stock was down 14.8%, and Pacific West was down 37.9%. Are we going into another bank failure? And do we really understand the ramifications, the dominoes of this? As a result of that, I did my research. I remembered a video, Too Big to Fail. No, a movie, Too Big to Fail. And you need to watch that. But before you watch that, I want you to watch another video that I just found, and I'll put the link to it in. In fact, it's available on YouTube, and it's called Panic: The Untold Story of the 2008 Financial Crisis. And if you never watch another video in the rest of your life, but you intend to be involved in the stock market in next week, you must watch this video today, tomorrow, before Monday morning, because you need to understand the ramifications of this bank failure and what it might mean to the stock market in the future. Now, do I believe that possibly the government will once again step in and save these banks? Because I don't believe it's just these three. I believe it's probably going to make it to my bank, Regions Bank in Birmingham, Alabama, because we have some small companies who have done startups. We have the same situation where Jerome Powell just keeps raising interest rates. So the investments that the banks have made are becoming that they're good if they reach maturity, but if maturity is 2 years from now, and I go in and say, "Hey, I want to take my money out of this bank and put it into a treasury bill because you're only paying me less than 1% for me to have that money there, so I'm going to take it and put it in a treasury bill and make 4%," and now they have to redeem their bonds that they're making 2% on to meet my demand to take the money out of the bank. I understand that. But what I don't understand is how are they going to save it? And then I understand that if they can't, if I've got $500,000 in there and I read the newspaper, I read the Wall Street Journal, and I hear on the news that my account is only insured for $250, I'm hitting the bank Monday morning and saying I need to get $250,000 out of here right now, today. And they'll probably say, "No, you can't have it that quick, Kerry. We got to do some balancing of our books." And you know what happens next. Kerry doesn't deal with that well. And I start creating a scene in the bank, and the little lady over here who's got $1 million in the bank says, "What the hell's going on here?" And we got to run on the local bank here in Birmingham, Alabama. And that's going to happen all over the nation. And businesses, if you're a business and you're making payroll and you've got $500,000 in your account, and you learn that, hey, that SIP or SPAF, that only covers $250. You're pulling your money. I know you are. You're pulling your money first thing Monday morning. And if you don't watch the news, you'll do it by Friday at the end of the week. So now the banks have a run on them. What is the government going to do? Is the government going to do what they did back in 2008 and bail these banks out and say, "Hey, we'll loan you the money"? And that's what they really did. That's what they did in 2008. They gave them $800 billion to substantiate themselves, to meet their obligations, and then they charged them interest on it. And we, the taxpayer, actually made money on it. But we rebelled. We rebelled because you're bailing out the banks. You're bailing out Wall Street. Well, Wall Street's going to need bailing out again. Because you watch what happens Monday morning. The market is not going to react well to this, and it's going to be. It took in 2008 from January through November. Yeah, it took that long. I went through and I built the chronicle, and in fact, you watch that YouTube video on Panic, the Untold Story of 2008 financial crisis, and you'll build the same chronicle as me. On March the 13th, Morgan Stanley agrees to buy Bear Stearns because Bear Stearns is illiquid. And September the 15th, Lehman Brothers filed for bankruptcy, and and then right within the same week, $85 billion to bail out AIG. AIG is the insurance company that backs up most of these banks. Hank Paulson and Ben Bernanke went to Congress in September and asked for $800 billion. And you know what Congress said? No, we will not do that. And Hank and Ben pleaded. The country is going to go into worse than the Depression. Watch that video. You're going to shake in your boots. November the 4th, Barack Obama is elected president and replaces George Bush, and that's when Ben Bernanke and Paulson move out of office. This will make you shiver. But you need to see it and understand it. And particularly if you have no recollection of it at all. I went to YouTube and I said, well, all these young YouTubers, they're probably explaining this to their audience. You know, they got over 1 million followers. They don't remember. They know nothing about the subprime crisis. They weren't here. They were 8-year-olds. Okay? So watch this and understand it. I am not predicting what is going to happen because I don't know what is going to happen. But what I am telling you is you need to understand this. And then you need to make a decision. Do I go to cash Monday because the bottom's going to fall out? Well, remember what happened after the subprime crisis. Go to TradingViews, pull up your chart, and look at an S&P 500 from 2006 through today. It went down. It tanked. The market lost 50% of its value. But then what happened? Then the digital revolution kicked in full gear, and it took off because the fear was gone. Because even though we rebelled in the streets that you're bailing out Wall Street, we forgot about that real quick. And as the market started to take off, and as the digital revolution started to take in, and the social media revolution started to kick in, and e-commerce started to kick in, we forgot about it. And in fact, there are many people who are investing in the market that know absolutely nothing about it. So I am saying to you, educate yourself. Read books, watch videos, watch movies, and before Monday morning, you must watch Panic, the Untold Story of 2008 financial crisis, and you need to watch Too Big to Fail. And have an understanding, because I believe these banks are going to, if they don't get bailed out, there are people who are going to be having their cars repossessed, having their homes foreclosed on, because they bought it with the money from cryptocurrency and from Cathie Woods and her funds and Tesla. I told you last week, Tesla is going to go down to below 150. It's heading that way because a lot of these people who made this money and from Silicon Valley are driving Teslas. They're flying private jets. They're living in billion-dollar homes. And that's all up for grabs now. Watch this, understand it, and then interpret it. But be aware, we've been through what? 2 world wars. We've been through 9/11. We've been through the dot-com bubble. We've been through the subprime crisis. We will get through this. And if you don't need the money in the next year and a half, don't worry about it. If you're invested in good, strong businesses, not some of the SPACs that Camille sold you last 2 years ago, you'll be okay. Because this country is not going to fail. The dollar is the accepted currency. We just may need to print some more of them to get us through this, to bail out the banks and keep people employed. There are going to be a lot of people next week whose checks are going to bounce. Know that. Wouldn't be investing in banks right now, unless you think it's all going to turn around immediately and you think Pacific West and First Republic will be okay. I don't know enough about banking to make that decision, but I do know enough about investing that I'm in for the long haul. This is a bump in the road, and no, this is a big damn pothole. So that's my take on it. Watch those two, that video and that movie, Panic, the Untold Story of the 2008 financial crisis and Too Big to Fail, and you'll have a leg up on the world. Talk to you again tomorrow, I'm quite sure.